I'm Jamie Chadwick reporting from Expana, bringing you your Friday wrap-up on food and agriculture markets as we close out the first full trading week following the recent conflict escalation in the Middle East. As we near the end of day 7 of the conflict, it has undoubtedly been energy markets that saw the clearest reaction in the wake of the strikes. At the start of the week, crude oil jumped sharply as traders priced in potential supply disruptions tied to shipping routes and infrastructure in the region. Compared with the week before the conflict, Brent crude moved from the low $70 per barrel into the high 80s at its peak, roughly a 20% move during the week. Liquefied natural gas markets also experienced volatility early on in the week, with European gas futures rising sharply as concerns focused on LNG flows and vessel traffic moving through key Gulf shipping lanes. As the week progressed, however, those moves have moderated somewhat. By Friday, oil prices remained elevated relative to last week's starting levels, but trading has stabilized below the highs seen earlier on in the week. LNG and natural gas markets have also pulled back from their most extreme early week spikes. Equity markets, meanwhile, showed a more measured response. Global indices did decline at the beginning of the week as energy prices rose and uncertainty increased surrounding the situation, but those moves have generally been contained. By the end of the week, most major equity benchmarks are modestly lower compared with the previous week. For food and agriculture companies, the most visible market signal this week has been through energy-linked costs, including diesel, freight, and fertilizer production inputs, reflecting the broader movement in global energy markets. We have talked about energy market disruptions a lot throughout this week, but there are less obvious disruptions taking place in other sectors of food and agriculture as well, including emergency surcharges being added to things like beef shipments, disrupted shipments of agricultural produce and grains, and booking cancellations and altered cargo commitments for almonds, with one almond trader stating, while the Strait of Hormuz could theoretically open to container traffic tomorrow, these impacts are likely to linger with carriers, insurers, financiers, and the entire logistics industry for a while as it evolves to account for risks like this. So, as we close the first week following the strikes, markets are perhaps showing moderated volatility by week's end, albeit higher energy prices and a great deal of uncertainty surrounding shipping and input costs within and well outside of the Gulf region. Stay tuned for more updates as the situation develops, including market-specific impacts across food and agriculture, exclusively on Expana. Visit expanamarkets.com to learn more.